Let's go ahead and get this started. I'm not going to bore you with all the degrees that I have because I don't have them. What I do have is I am the incoming president of the Asian Real Estate Association of America. My name is Tasha Chang, and in 2 days I'm being installed as a 2024 president. And if you don't mind, I'm going to read you the beginning half of my acceptance speech. As I stand before you today, embracing the honor as serving as this year's chapter president, I am moved by the journey that has led me to this moment. A journey marked by resilience, a renewed spirit, and a profound belief in the serendipity of life's challenges. Just like today, many panelists didn't make it, but the ones who did make it wasn't by mistake. They were meant to be here. I've been warned that I am a controversial president because of some of my views in the introduction of my new Human Rights Awareness Chair, and that this year will be a difficult year for me because of my opposition. Well, to those naysayers who think they can stop me with a challenge, I say challenge accepted. Even a concrete retainer wall on I-35 could only slow me down, but they couldn't stop me. And you, my friend, are no concrete wall. I welcome you to join me on this journey, and I thank you for adding more fuel to my flames. In 2019, which was a pivotal year, I was poised to become president. However, life took an unexpected turn with a car accident that resulted in a fractured spine, and in 2 places, it fractured. It crushed multiple vertebrae, leaving me unable to walk for months. This ordeal was not just a test of my physical endurance, but a profound lesson in patience, resilience, and the strength of the human spirit. It demanded every ounce of courage that I had, the grace of God, and the support of my amazing family and a few close friends to rebuild my life, to learn to walk again from a place of vulnerability and to find strength in darkness in what seemed like a setback, but it was only a setup for a new journey. Now, God doesn't make mistakes. That journey led me here in front of you people today. With that said, you now know who I am. My faith and my perseverance, that is the only credibility that I need. Before we start this panel, I want to state that if we instead removed the word race from our language and replaced it with the words love thy neighbor and invited God back into our homes, schools, and workplaces, that would solve all the issues that we face as a nation today. And now let's begin the panel. Minorities are adversely affected by modern redlining, appraisal bias, and issues of insurance affordability. In several significant ways, each is contributing to a cycle of economic disparity and systematic injustice. Modern-day redlining. Despite formal prohibitions, modern redline practices persist, subtly influencing where banks and lenders decide to offer or deny services based on race rather than the financial merit of individuals, leading to reduced access to mortgages, business loans, and other financial services for minority communities. Appraisal bias, racial bias in property appraisals results in undervaluation of homes owned by minorities compared to similar properties in predominantly white neighborhoods. Insurance unaffordability. Discriminatory practices in the insurance industry, such as pricing models that disproportionately impact minority neighborhoods, make property and auto insurance less affordable to individuals in these communities, not only affects their ability to own and maintain a property, but also increases financial strain on households already facing economic challenges. Ending the cycle of injustice caused by these practices require aggressive policy strategy. And that is what we're going to be focusing on today. Now, my first question to this panel, and any of you feel free to answer, how would you solve data transparency and collection so that we can enhance transparency and data collection in housing, appraisal, insurance industries to identify and monitor discriminatory practices?
Good afternoon. My name is John Daniel. I'm the Chief Operating Officer of 10,000 minority appraisers and 10,000 black appraisers. We're in the business to train many, many more people of color in the industry of appraisal. Right now, appraisal is number 3 per the Department of Labor It's the whitest, third whitest industry in the country behind lumberjacking and also things like that. My point being in all this is what we know for sure in terms of transparency is that technology has not been used to mitigate bias as it is. We know that the system itself is broken and that it needs to be updated. Most recently, as we sat at a subcommittee, congressional meeting, the gentleman who was running the authority over setting standards and qualifications for being an appraiser said it was only the last 2 years that he knew that there was bias in appraisal. 34 years. Everybody was aghast. Everybody's jaw dropped. My point being is that change is underway. And so I don't point a finger at any one person, but in order to be transparent, you have to be data-driven. You have to be evidence-based. And technology plays a role in that. You also have to avoid the whitewashing initiative, which says, in order for me to get an equitable and appropriate appraisal, I need to bring a white person into the house, take all of my black paraphernalia down, or whatever it might be from whatever culture, to appear to be white. It's important that in order to get this transparency, we have to have people trained who know the culture of the area that they're appraising. And secondly, we use technology from drones to data collectors to market analysis that would give you a fair appraisal. That would be my initial answer to the question.
Okay. And now I just wanted to add, I've been a realtor for 16 years. And one of the things that I always do to my clients, I represent a lot of the Asian community because I'm the Asian president, right? And so I have a lot of Indian clients. They're Asian. I have a lot of Chinese and Japanese clients. And they're very religious. And they like to show all of their artwork on the walls, all of their family on the walls. Whenever we're selling a house and the appraiser's coming, I ask them to remove all personal belongings. If it's something of a religious value, someone's going to know that you're not white because you worship a Hindu or a Buddhist God instead of Jesus, right? I worship Jesus, but you shouldn't have to be condemned because you worship somebody else. So I ask them to remove all of that. So I can vouch that that is prevalent in real estate.
Also, I'm sorry. May I also intercede here?
Sure.
I've been a realtor for 40 plus years.
Come on now.
And this bias in the appraisal business has been there. We've complained about it. When we complained about it, they just said, you know what, y'all always want to call the race card.
Yeah.
No, it's not the race card, it's what we see. And so if we want to take a look at what has been going on for the 40 plus, this has been there. No one has wanted to take a look at it.
Right.
And no one should have to change nothing in their house in order for them to get a fair appraisal.
Correct. I agree.
Sometimes you have to even switch lenders to get a fair appraisal. And it's sad. It's really sad.
Okay. And now for the next panelist, what incentives for fair practices would you include? How can we create incentives for banks, insurance companies, and appraisal professionals to engage in fair practices and penalize instead those who engage in discriminatory behaviors?
One of the things that I'm Kevin Kimball. And one of the things that we've talked about a lot, and the research has shown that CRA reform is a critical piece of this. Changing the CRA rules so that banks, can't get a good score if they have these problems. If they can't demonstrate fairness in their appraisals, grading who they're, there's a thing in banking where, banks are responsible for the relationships of their outsourced work. So they're responsible for those people, and we need to make sure that they're graded on who they use and how they use them, right? And that they can't get a good score just from having financial literacy. So I think, and if you get 200 complaints of bias in appraisal, then you get knocked down your score. You can't get a new branch. You can't, and that's the kind of legal limits that we need to start placing on this process.
Thank you.
I'd like to offer one more point to support what you said, and I'm going to come from a different lens. Banks want to mitigate potential loss. cut to the chase, follow the money.
Yeah.
If you can use technology to support behind other things that appraisers use to get a more accurate analysis of the value of that property, they're going to feel good about that. Again, follow the money. You have to train people who are culturally competent. You have to have the technology that will allow you to give a more fair appraisal. And that's something we can act. You can't legislate biased out of somebody's heart. But what you can do is have backups on whether or not the information is accurate.
And hold people accountable. So the banks aren't held accountable for bad appraisals, right?
Correct.
So that's why we say go after the CRA, because that they can't, if the data's bad, if we know, if you got examples of a house where you had the white appraiser come in and give one and then a black appraiser, then automatically that's not only is it a litigable issue, but then also the regulator has to take that into account on their fact finding of the bank's activities.
I would add that they should be able to use a similar white community as a comp
Right.
and not just be limited to a 3-mile radius.
Yeah.
If this house is similar in all effects, then it should be treated the same as a
Yeah.
comp.
Absolutely.
And so next panelist. For community reinvestment, what ways can we introduce and encourage financial institutions to invest in historically underserved communities, thus countering the effects of redlining?
So I'll pick that one. Go back to CRA. I mean, CRA is, between the CRA and FDIC and the OCC, Office of Control of Currencies, rules on national banks, there's a lot of leverage points. You know, when everyone takes a kid gloves to the banking industry, right? So there's no one ever comes and crashes down on a bank. Even a bank, Wells Fargo, stealing people's houses and cars, barely got a fine. Like only one person went to jail.
Yeah.
So there's clearly the regulators are not, we need tougher enforcement against the regulators to go against the banks who are doing things that you're talking about.
Would anyone else like to comment on that one?
I think equity is a very important wealth-creating tool. Most of America, from LA to Philly, uses their home to create that equity if they own a home. Banks would like to support buying homes, buying businesses, and property in general. I think what's key here is, in the world of appraisal, we need to share it with a different lens. I'm coming back to building wealth in a community. The world of appraisal is part of a global supply chain. Do the math. You've got steel, you've got concrete, you've got things that are used in construction. If a person can be gainfully employed, and you can make $200,000 a year working for the Veterans Administration, which has the most equitable and fair approach to appraisal, because they're concerned about veterans. There's lots of money to be made in this, and there are lots of business deals to be perceived in the community if indeed you understand valuation and appraisal. So what I'm talking about, I'm a former economic developer that was a part and was the director of a national utility. Now it's called Exelon, it was called Pico Energy. So I've worked throughout the country and outside the country on various kinds of technologies. But one thing I know is you create wealth in this situation by starting on the block where somebody owns their home. So being able to get banks involved appropriately, not the economic bubble of 2008. That was a problem. People were receiving loans for things that the bank knew they could not return. They would not keep up with. But where there is an opportunity to bring people together with the awareness of equity, and quite frankly, our country doesn't understand that for underserved people. They don't have time to think about that. They're trying to eat, have a roof over their head. So we have to promote through our HBCUs, through our land grant colleges, whatever means possible, the value of equity. But we also have to increase workforce development skill sets, entrepreneurial skill sets. We just heard the MBDA is being neutered a couple minutes ago. It's a very important piece, that there are organizations that are promoting entrepreneurship, promoting workforce development, like the Department of Labor. All of these organizations, federal, state, and local, need to be involved with building wealth in the community. So as we talk about dealing with what the bank should do, There are a multiplicity of other organizations who can support building wealth, but it has to be done through education. You can't do education just in the schools. It's got to be grandmama and the sage and the influencers on the block who are sharing this. It's got to be people like Kevin who on a regular basis are sharing what's real. And so it has to be organically coming from the community and from the White House down.
Yes, we need a grassroots campaign to help build generational wealth, for sure. Now, education and training. How can we implement comprehensive education and training programs for appraisers, insurance agents to recognize and eliminate bias in their evaluations, besides the CRA?
Oh, how can we do
Yes,
it?
yes.
Well, I think education is the key. One of the things that I feel that that people in the real estate industry is not aware of, they are not educated to the level they should be. When I became a realtor 40 years ago, I actually was educated in depth. Right now, you can go through to real estate school so fast, you don't learn anything. And that's the same thing for appraisals. A lot of the in-depth knowledge is not there. They don't know the crux of how you really should come to this amount for this house. What they are doing is they're using like a program, and this program is basically neighborhood sensitive, just to that neighborhood. If there's not two other houses in that neighborhood that have actually sold, then you can't use that neighborhood. You got to go out of that neighborhood. And when you go out of that neighborhood, you have to be able to use your common sense and use your knowledge and actually be able to subtract and add to value. And I think that's one of the things, the education portion of the appraisal and the real estate agent has now gone through a microwave process. And in that microwave process, they're not learning the in-depth of real estate and what should be done with real estate.
Well, this question speaks to what we do as 10,000 minority and black appraisers. We are building a online and in-person national academy that will teach cutting-edge appraisal skill sets. I think it's important that you know we're working with multiple federal agencies, because there lie a lot of job opportunities that are really lucrative. But there's something bigger than that, and that is the training ground when you're working with Interior, when you're working with Department of Labor, when you're working with organizations like USDA, Forest Service. The training ground is world class. So not only do you learn the various elements of cutting edge appraisal, you're learning it across the country. And it's really, really important that you have it. I want to share something with you. The federal government has about 62% of the land of America that is considered federal land. We are behind the game on updating rent value of property for the federal government. I'll offer you an example. The USDA Forest Service invested $1 million in updating, and I'm using rent specifically because most people know what it means. They updated the rent schedules of property that various companies would come through. They got a return of $40 million for one fee schedule, one rent schedule. Do the math. At the end of the day, there's lots of opportunity for appraisers in the federal government to do appraising and bring a lot of money to the government, but they've got to be trained properly. Using drones to look at property or inside of property, using the appropriate equipment, using AI technology, using what's there to bring a more accurate appraisal and valuation of a property. When you talk about appraisal, you're not just talking about land, you're talking about land, air, and water. And as we go forward, it'll be interstellar. every time somebody sends something up in space, an insurance company is offering a value to it. We're that cutting edge with 10,000 minority appraisers and 10,000 black appraisers, which we say boldly, to know that it's important to stay on top. And let me say this one last thing. At the end of the day, we're America. Let me say that again. We're America. We're a melting pot of cultures. And therefore, we have to go forward in the rural areas, the urban areas, and the tribal nations. We have tours going on right now. We were at Alcorn University yesterday to meet and greet the needs of those communities. I got to tell you, there are a lot of poor white people in this country too. It's not about hue or gender. It's about whether or not you have a voice at the table. We can talk about diversity and equity, but if you're not included at the table, you might as well be on the menu. Forgive me for my corny little joke, but that's the key. We've got to spread awareness of what appraisal is as a part of the global supply chain and of what we do in the economy.
So one statement I would say to what your last statement was, I would recommend having the buyers and the consumers themselves also be educated in appraisal and holding
We're
classes
doing that
on
right now. We're working with a group like CoStar, I won't mention what their name is, and they'll become partners with us in this process. And they deal with buyers, sellers, suppliers. Bottom line, so do we. Appraisers should also do that. But we've got to take a different business lens on what's happening here. So to your point, I agree.
And so for you, legislatively, would you mandate that for appraisers?
We live in tough times with legislation. I've worked alongside lobbying groups. In my wife's business, she's pharmaceuticals. There are 20 lobbyists for every Congress member. We got to deal with this in reality.
Yeah.
Okay, yes, we got some congressmen and some senators who are very serious about doing their job in the community. I'm not in any way minimizing anybody, but we got to look at what's going to, from different vantage points, get us where we have to go. Do I think that's a viable option? Damn Skippy, you have to do that. You just got to find somebody who is going to embrace the ideology of the melting pot and getting a voice to everybody. And that's hard when you're exchanging chips as a congressman. Y'all know what I'm talking about, okay? I got to give this up to get that. And we have to respect that on their part. Those men and women are in a tough position. And the world of politics, it's a different beast. But I do think you're absolutely correct.
Amen. And now I'm glad you brought up AI, because that leads me to my next question. With the new technology that we have available to us, including AI, which could remove the race card when they're entering into an appraisal, right? How can technology solutions and innovation practices be leveraged to identify, reduce, and eliminate biases in lending, appraisals, and insurance underwriting processes?
So I'll throw it to my good friend Josephine, but the data that's collected for the AI is what drives the results. So if you've got bad data because you've got bad evaluations, then the AI can only be of so much use. So,
Correct.
so Josephine, go ahead. You sued Geico.
Well, yes. By the way, I did not introduce myself. I apologize. My name is Josephine Morning. I am the president of the Prince George's County chapter of the Southern Christian Leadership Conference, Prince George's chapter. I am glad to be here. And as we go into this appraisal, redlining, and so forth in the industry, yes, I noticed some time ago that there was a discrepancy in insurance premiums, specifically in underserved areas. Now, what happened years ago when we went to get insurance, we had to give them our social security number. They ran a credit check on us, okay? And our credit scores, the thing that happened in the African American community, and I'll say that the African American community back in the day, our credit was not something that we really paid attention to because we were not taught how important your credit was at that time. So what happened was the insurance industry always have a way to get us. So what they did was when you applied for a policy, they always asked you for your social, and when they got your social, they ran a credit report. And if your credit report, if you had bad credit, then you were going to get the high premium. So what happened in the last few years, we have been educated as to how great it is to have good credit and the benefits of having good credit. So because of that, and because of all of these educational seminars that we have, such as this, now we are seeing that more African American and people of color have higher credit scores. So what happened was the insurance industry realized, oh, we can't use that anymore because that's not bringing us the big dollars. So what they decided was to use a zip code. And the zip code is how they charge the premiums. And they know the zip codes that are in the underserved areas. Okay? And also I found out that the 4 little digits that was added at the back of our zip code, that also has like a little, it gives a message. Okay? So you could have 20785, which is considered Landover, Hyattsville, Chevrolet, and all of that, right? But that 4-digit on the end will tell you whether it's Chevrolet. And Chevrolet, this is Maryland I'm talking. Chevrolet, Maryland is considered a higher income area than the 20785 Landover, Hyattsville. Then there's a section of Hyattsville, once again, has a 4 digits behind the zip code that will tell you it's a Hyattsville that's in a higher area, arts district, and things like that. So what has happened is, because of this, we have people who have to make a decision. Will I pay my insurance premium or will I pay my rent? And some of their decisions have had to be, I have to pay my insurance premium because I need my car for my employment. Therefore, the families are sleeping in the car. They go in the fast food restaurant, sit there to around 9:30, 10, drinking a soda. They keep ordering a soda. They have the child do the homework. After all of this is done, they go back to the car and they sleep in the car. The next morning they get up, they go back in the restaurant, and they take a little sprinkle on their body, and they're off to school and to work. This has caused higher homelessness. This has caused higher poverty. I mean, people are struggling. And I've seen this myself, and that's why I went at one of the biggest insurance companies in the country, Geico. And I went down there protesting the fact that they are using this it's redlining. I don't care how you look at it. It's redlining when you use a zip code to determine how much premium I will pay. And what is so bad, they ran the beltway right through these neighborhoods. Okay, so what happens also, they say, well, we look at the accident rates. Well, yeah, if you look at the accident rates on the beltway, because most of them people on the beltway, they're traveling north and south, they don't even live in the area. But we are getting dinged for the folks who have accidents on the beltway, and a lot of them are not residents of Maryland. So this is unfair. We're not finished. We continue. We also have been at them about not investing money in the community. African Americans are one of the big stakeholders in Geico, yet I can see Geico name behind the NFL and when the football players are playing, but I can never see Geico put any money back into our community. And as they say, if they don't contribute to us, we need to stop contributing to them.
What I like about what Kevin is doing, give her a hand. See, Kevin is looking at the structural sources of unfairness. Jim Crow is still alive, ladies and gentlemen. Don't get it twisted.
That's right.
And so we are not going to deconstruct it in a day. But this kind of informative forum allows us to look at the ecosystem.
Yes.
There's toxicity in the ecosystem. If mainstream America has a cold, underserved America has COVID.
Yes.
You feel me?
Yes, yes.
And we're dying much more quickly from pre-existing conditions. So your question was about AI, and my background's in fiber optic footprints, e-commerce incubators, carrier hotels, the guts of the internet. I can tell you garbage in, garbage out. This was said by both of my colleagues here. However, there are quality assurance systems that you can use. You just have to be in a position that you have the authority to use them. So as we go through looking at the structural barriers to equity, to inclusiveness, we need to look at that as a team.
Yes.
It will not be solved in a day. But what we can do is create wealth. Money talks,
Yes.
and it walks.
Yes.
And if you have a viable business such as an appraisal, there's lots of money that can be made because you're working with the global economy. So it's a combination, it's a two-sided coin. You gotta create wealth and you gotta deconstruct a very unfair system. AI can help if the right people with the right quality assurance pieces are right there in the room.
And it's being asked the right questions. Exactly what you guys said about the data that is pulling and deriving the answer from is correct. One thing I would recommend is removing 2 questions from the application, basically from all applications. Are you a female or a male?
That's right.
Are you married? Are you single?
Right.
Because I guarantee you, a single mother raising 5 kids, paying a mortgage is going to have a higher interest rate on her insurance than a married couple. So they're going to punish that single mother, make it even harder for her to keep up with the mortgage on that house and that insurance to cover her family than it is for a married couple who already has 2 incomes, right? So I would remove that question. One thing that we did in the Asian Real Estate Association of America was we lobbied Congress to add Asians to the census report. Because how can the U.S. federally allocate money from a group that they don't recognize? And we were able to get that approved. So money does talk. Yeah, and it takes action. Action on what you did. I guarantee if everybody went and rallied behind her in that lawsuit, and then they did multiple lawsuits against every single insurance company with the same basis, they would change their rules.
Yes.
They would change their application. And they would change their criteria on how they're going to approve us or disapprove us.
Can I jump in for a hot minute? There was a lawsuit, well, wait, let me back up. Our leader, Thaddeus Dawson, is a 40-year appraiser. And regrettably, one of his childhood friends was undervalued for his property up to $200,000.
Wow.
Right now, HUD is involved. The Justice Department is involved. There was an Investigate TV film done 2 Mondays ago that shared the essence of this program. If any of you like to see it, I can share it with you. The point being is it basically is undergirding everything that's being said on this table, but for one individual. So there are a multiplicity of federal agencies, there are attorneys involved, and hopefully this particular case will shed light further on what needs to be done. Basically speaking, there's a lowballing going on in all appraisal for us. And so it's important to highlight these kinds of stories, and that's our job, okay, to be out there sharing, making aware the population of what's going on with this. And we'd love for you to participate on our tours across the country, please.
Yes, okay, so on the appraisal bias, Larry Miller with WUSA 9, he launched an investigation, and I mean, it turned out that it was really terrible. We're in Prince George's County, Maryland, where you have the wealthiest African Americans than any county in this country. Though we were having appraisal bias taking place in our county. And the thing about it is, the appraisals that they were using, well, I guess they just choose appraisals, they come down, they choose them, but the appraisals were not as well knowledge on the areas. And in essence, the appraisals came back like $200,000 and $300,000 difference. But what happened was when they took a house right in the same community, had a white couple to go there to represent like they owned it. And what happened, the appraisal came back about $300,000 more in the same community. Yes. So Larry Miller actually won an award for doing this segment. So also, when you were talking about the boxes and, the check boxes I think just like we banned the box, if you're familiar with ban the box was done to take the boxes off of the applications because we found that people who were re-entering from the system was having a problem getting a job because of that one box that's on the application. So the ban the box initiative took place. So we not only need to ban that box, we need to ban a lot of boxes. We need to ban the box on what color am I. I don't figure I have to tell you what color I am if I'm trying to get a loan. Now you say you want to know this because your statistics will say that you granted a black person a loan. Well, what difference does it make whether I'm black, white, Asian, whatever? If I qualify, give me my loan. So we need to ban a lot of boxes.
And I would add that the man that had the lawsuit and yourself, you guys are the spearheads of the grassroots coalition. You don't know it, you maybe don't know it, but you guys are the ones that are taking action to make change happen. And without those lawsuits, it's not going to happen because nobody's holding them accountable.
Well, they said we're troublemakers. Okay?
Well,
okay.
We're here to make some trouble then.
Good trouble. Good trouble.
All right, next question. Now, the impact on assessments. How can regular impact assessments be institutionalized to evaluate the effectiveness of policies and practices aimed at combating redlining, bias appraisals, and insurance adjustments, and ensure continuous improvement?
Okay. Well, like I said, I think it goes back to what I said. I don't think we should be judged according to where we live, the color of our skin. I think that more of our people who are put in positions to do appraisals and who are dealing with in the insurance industry should have more training because they act as if they are not aware of what they are doing, but I know that they are. Okay, so I just think education is very important in everything. And no matter how much you educate a person, if their mindset is on one thing, they're going to stay that way. But I think sometimes it helps when you take a little lawsuit to them and let them know you can't do that. Okay.
I think what Josephine says is exactly right. The deal is we have to have much more enforcement and lots tougher enforcement against people who are bad actors. All too often, if you are a bad actor, to Josephine's point, these guys know they're being racist. I mean, they're not acting. These guys manage money, they manage risk all day long. They know what they're doing. So this is not unconscious bias. Is like, I took that out of my vocabulary because there's no such thing as unconscious bias. People know what they're doing, and I think the only way to do is more enforcement and stricter enforcement and tighter laws on what those things look like. So.
If you marry money with that, we might call it Justice 40. Are you all familiar with Justice 40?
Yes.
Okay, because 40% of the benefits that occur from the trillions of dollars coming down from Pete Buttigieg and the Department of Transportation are supposed to go to underserved communities.
Right.
To the point of Josephine, we make people more aware. To your point, Ms. Moderator, I think that's key. And I think finally, we've got to get our legislators, we've got to get our federal, state, city, community, county, whatever, legislators involved with this, and to your point, have a grassroots initiative. Which brings me back, and forgive me if this is a commercial, 10,000 black appraisers and minority appraisers are going across the country to all land-grant institutions. Let me square that up. That's not just an HBCU, that's the Ohio State. That's Louisiana State University. These are places where you can nestle into the community and go from the sage on the block to the person who's the president.
Right.
And so I think key is we have to have an ongoing dialogue and engagement that's meaningful and relevant Those two words are important to the people we're speaking to.
And also, I'm going to tell you, also they did a study. When it comes down to personal injury, that insurance companies normally pay people of color less money than they pay their white counterpart. I mean, the facts are there. You can pull it up. And the reason being, they said, is because we don't normally make as much money as our white counterpart, and because we are fraudulent people. That was the reason. I mean, pull it up, because that's another thing I'm fighting. I mean, I feel that my personal injury, my body that was injured, has the same effect as my white partner whose body was injured, and I feel it should get the same amount of dollars. But there's a problem there also.
How can we improve dispute resolution mechanism for consumers who believe they have been victims of redlining, bias appraisals, or insurance injustice with the current regulations we have?
How can we improve it?
Improve them.
Well, like I said, I think that when this happens to you, you cannot be quiet, because silence, they don't do anything. But when you go out there and you raise a little HELL, you get things done. You call people attention to what is going on. You see, if you never open your mouth, nobody ever knows that this is happening. And you're going to have people who are not going to follow you. I got to tell you that. I'm sure Dr. King went through a lot of that too. But it don't matter. I told him if I have to go alone, I'll go alone. Okay? And I also go on to tell him, you don't get locked up now for protesting. So why can't I get more of you out there protesting with me? When they were marching with Dr. King, they got dogs, the dogs bit them, they were hosed down, they were locked up. Now we can march freely to protest, but we still got people who are so afraid of going out there to protest. They want to just keep their mouth closed, and this is why we don't get anywhere. This is why we can't get things passed, because everybody wants to be silent about it.
I would add to that, silence is silently condoning what's happening. If you're not speaking up, then you're enabling it.
Right.
Martin Luther King was never silent because he would never condone it. He spoke up and gave up his life to do so.
Absolutely.
Thank you.
One word I say, we have to be disruptive.
Right.
Yes.
Let me say that again, disruptive. Now, how do you do that? You first have to have an awareness of yourself, your strengths, your weaknesses, the opportunities to get better. You also have to have the same thing for the environment that you're working in, with the specificity of appraisal, real estate, whatever it is. Then you develop a course of action that makes some sense, but you're there to disrupt a system that quite often is unfair.
Thank you. You were an amazing panel.
Thank you.